Hey guys, Dan Fitzpatrick here, stockmarketmentor.com, and today I want to look at Shopify. Here's why, which rhymes with Shopify. This stock has been in consolidation for a while, since it last reported earnings. When was it? On the 27th, I think it was. Stock really popped up here and had a high close, so it didn't pull back. After all this move up into earnings, 60%, the company reports, and the stock, it doesn't shoot up anymore. Well, thank the good Lord for that. It's nice to have more than one trading day remaining. But it did hold its ground. And so then we look at the weekly chart. We did really well on this, by the way. Pardon my notes. I'll just kind of disappear them there. On the weekly chart, you can see this thing has still a long way to go to get to prior highs, but we don't care too much about that. What we care about is what's the next move. So I think the next move is actually higher. That's just kind of the way the market seems to be going. And so as long as this stays below 75, I wouldn't be buying it here. It's not like you're gonna get that much of a jump percentage-wise on a breakout. If you say, oh, I'm gonna buy it here, well, that saves me I'll make 78 more cents. Big damn deal. Wait for the breakout on the upside, or if the stock happens to pull back to 71 and then shows you that that level will hold, in other words, it's not gonna fall back below here, then that's a time where you can kind of start building a position on this little pullback. The thing that's important to note is this green line here. This is the volume weighted average price. And what I started this on the day that the company reported earnings so that I could see where, generally speaking, is the buying above or below where the volume weighted average price is, like where's most of the volume. And it's been a little bit all across the board. Today was the first time that the stock really came up and blew through the VWAP, this anchored VWAP, and then on heavier than average volume. So I like the way this stock's trading. If you're long the stock, I'd say just stay long and keep your stop a little bit down below here. Otherwise, wait for the breakout. Now, on another note, I'm going to be offering a course called Mentor Trading Mastery. It's actually open for registration now, but I'm not going to, this isn't my time to pitch anything to a big email list. I had a session last weekend that went really well. There were a few things that went wrong, such as the link to sign up didn't work. Turns out it was case sensitive, which is weird, but I don't set those things up. I just chew people out after the fact. Anyway, so it had a really good response, notwithstanding the fact that you had to kind of be enterprising to figure out how to sign up for the thing. So I am going to be sending out more videos notifying you of that. And I would just suggest this. Look, if trading better at all interests you, at least watch one of these videos from soup to nuts, because you're probably going to find that you're almost kind of dumb for not taking advantage of this because of what it offers. And it's not just about me. It's actually about you. So check that out. I won't go into more detail now. And I may, but I'm not sure. It's holiday season for me too. I may even host a live webinar sometime between now and then to answer questions and stuff. But this is the time where everybody's scrambling around for tax deductions. And so I'm happy to help you out. All right. I'll see you guys next time.